The defined benefit pension and the endowment and foundation markets are important areas of focus within NAREIT's investor outreach and education efforts. On average, approximately 10% of pension fund assets and 15% of endowment fund assets are invested in commercial real estate. In total, this represents well over $500 billion. These investors were largely on the sidelines during the second half of 2008 and through 2009. However, 2010 stands in contrast. Buoyed by portfolio gains and what appears to be a relatively more promising, although fragile, economic outlook, are actively committing new investment capital to commercial real estate. While investor sentiment may not be exuberant, many recognize that commercial property values have declined appreciably and that dislocations in the market create opportunities. In a survey of large institutional investors conducted earlier this year, it was noted that new capital commitments to commercial real estate through the course of 2010 are expected to be on the order of $34 billion. This represents an 89% increase over the levels seen in 2009. And importantly, the amount targeted for publicly traded REIT investment has also increased. In our outreach conversations, we've noticed a heightened level of interest among investors in commercial real estate opportunities, and how publicly traded REITs are positioned to take advantage of those opportunities and how they contribute to investment portfolios. NAREIT's key message as investors contemplate adding or increasing their commercial real estate exposure is that publicly traded REITs and real estate securities offer meaningful advantages as a way of obtaining that exposure, domestically and internationally. REITs have strong long-term performance, not only when compared with other investment alternatives such as stocks and bonds, but also relative to private equity real estate investment alternatives. Also, REITs possess attributes that have too long been overlooked and undervalued in terms of their critical importance. Market liquidity, transparency, strong investor-aligned corporate governance, and a simple business model driven by disciplined capital and devoid of complex financial engineering have come much more sharply into focus as investors integrate the risk management lessons they learned through the financial crisis into their investment decision making. Pension funds and endowments are coming up the learning curve on publicly traded REITs. They're embracing the broad utility and flexibility REITs bring to their portfolios as a way to invest, monitor, and manage commercial real estate exposure. In increasing numbers, pension and endowment funds are exploring and integrating publicly traded REITs strategically and as tactical tools within their real estate investment programs.